welcome. You're watching The Bottom Line with me, Eropa Madzena, and we're talking all things market with Gareth Montana from Corian Capital. Thank you for joining us.
My pleasure. Thanks for having me.
Let's start with the volatility that we saw on the markets that dominated January. That trend does not seem to be backing. What's driving the fickle market that we've seen?
So, often you can try and scrounge around for many different reasons for, directions of market and volatility, but I think the majority of it stems from the US dollar. There is no doubt we've got some geopolitical concerns globally, heightened tensions between America and Iran, but really it stems from the case for the US dollar being the reserve currency of the world, interest rates in America, change in, regime with regards to what the interest rate cycle could look like. And specifically going into the end of January, there were quite a lot of ructions around the appointment of Kevin Walsh. And that's really what's, between the driving of big moves in commodity prices and the US dollar, that is a cause for a lot of the volatility.
Despite the volatility, though, if we look at the JSE specifically, it has performed at record levels, right?
Yeah.
Yeah.
So look, we've been very fortunate. I mean, the JSE returns are remarkable, quite frankly. And I think we're looking at over the last 1 year, 42 to 44%, depending on which day we're looking at, because of this volatility. But to make that even more fascinating is that if you take a dollar into account, the rand's appreciated during that period significantly too. So in dollar terms, we've had, I mean, it would be hard pressed to find a better year from a South African equity market return.
Let's speak a little bit more about South African assets and how they fared in January compared to the global peers.
So once again, we had another strong month. Look, a big part of South African market returns over the last year has been driven by resources. So and specifically platinum and gold counters. And with the strong move that we've had in gold price, despite some recent pullbacks, a big cause for those moves has been through these gold and platinum counters. So in January, even though the last day of the month we really had this big drop off and drop offs in silver not seen since the 80s, as well as gold price, we still had a very good month. I mean, I think north of 3%. So South African equity markets holding strong, South African bond markets holding strong. So despite and in spite of what's going on globally, we still holding up there.
You spoke a little bit about Kevin Walsh a little bit earlier on, and I just want to get a greater sense from you as to what the market sentiment is around him. What are some of the big concerns there?
So Jerome Powell, the incumbent, has been very anti-cutting rates, which President Donald Trump has been advocating for. And he often does some crazy things, but there is some rationality in that he wants rates lower to stimulate, whether it be the housing market, whether it be the broader economy in the US. He's looking for lower rates to just give some incentive and kick up to the US economy. With Jerome Powell, he's been very reluctant to. And with the appointment of Kevin Walsh, there was an idea that he was going to be coming in and cutting rates dramatically, but he seemed to come with a more measured rhetoric in terms of worried about balance sheet, not necessarily as, what we would say dovish. And what we mean by dovish is that he's going to be aggressively cutting rates. So therefore, off the back of that, the US dollar rebounded, because suddenly where people were worried about rates dropping lower, the value of the dollar dropping lower, the dollar started to find a bit of ground. So it remains to be seen how this plays out through the cycle. I mean, there's many points to try and understand the fiscal situation in the US. One of them is the fact is they've been building up ridiculous amount of balance sheet to support the economy since the COVID times. And, where that needs to be reined in, and I think that's where Kevin Walsh is focusing on. but he could still be accommodating with interest rates.
Mm.
But generally, the end of last month was very much driven by that shock and that announcement. And, we have seen gold rebound a little bit, but there is no doubt that is going to be one of the key drivers of market returns going forward.
I really want to ask, what kind of federal chair does the US need? A hawkish one, a dovish one, or somewhere in the middle? And is Kevin Walsh one of those?
I think there's going to be many opinions on this. My personal view is I think what he has sounded makes sense. You can't carry on building these balance sheets and just growing recklessly that a lot of the world has been doing, but specifically America. I mean, if we're trying to relate this for our viewers, imagine a bank just going out and just lending and lending and lending and not worrying how, why, or what they're doing, but just continuing to lend because they need to. So if you look at that from a country perspective, and that's what the US has been doing, just this burgeoning balance sheet, it needs to be reined in. Is there room for interest rate cuts? Potentially. However, America is still, fully employed pretty much. So you need to be careful of getting runaway inflation with too lower rates. So yeah, I think the approach is always, the most simple answer, you want pragmatic, and you want someone to be able to really assess, I'm not cutting rates because Donald Trump says I need to cut rates, but there's one thing, we need to have a bit more discipline and bring in this balance sheet, which I think has, I think there's a lot of these governors these Fed chairs and governors have been guilty of for a while now.
And I suppose one of the other important things that we must note when it comes to the Federal Reserve Chair is the independence of the Fed. There were fears around the independence after that investigation was launched against Jerome Powell, and I wonder if Kevin Walsh comes with that the confidence, or that it will be independent and he can make his decisions independently with his team.
And I think that was initially the big concern, is that the next Fed chair was going to be the puppet of President Trump. With him stepping in straight away and coming in with a more hawkish tone, that's why the dollar rebounded. So that is a very important element, and you spot on. And I think one of the reasons where our South African fiscal discipline has been so incredible is because we've got an incredible Reserve Bank governor, and we
a little bit hawkish.
Correct. And I think we could all argue that we could have rates lower. And we do, as a South African economy, need some stimulus, but there is no doubt the independence is there. It creates confidence from foreigners, from foreign investors. So despite what's going on, whether it be with Eskom or Transnet, the one thing that they were never concerned about is the independence of our Reserve Bank. So I think the point being is that there's always going to be arguments to both sides, but that independence is critical. You are 100% correct.
Yeah. I'm glad you bring up the South African Reserve Bank, because 2 weeks ago they decided to keep interest rates unchanged. And the big question on everyone's mind, because they've got room to cut, is why?
I can't answer. I again personally think that we should probably have lower rates. You just have to look at our real yields, our real interest rates. What does that mean? Your interest rate above inflation. And that's generally what you're trying to keep a measure of. Our inflation, although a slightly higher print recently, we've got one of the highest real yields in the world. We have room to cut, and our economy needs some stimulus. So the discipline has worked. We've got inflation, our inflation targets being brought down. The inflation, within where, very close to where we're targeting to be. But personally, I do believe that we have got room to move. And I think the bigger concern is that what happens if there is ructions in the world, and what happens if we do have big issues out of America? As an emerging market, you always struggle. Then suddenly, what's your room in the other way? If we haven't cut enough, and then you've got to start hiking, we will start to hike from a base higher than we should be. So that is, never mind the stimulus, it's also is, by cutting also gives you room to go the other way. Right now, we've got, it's great for yields, it's great for people with cash, but we need stimulus. We need incentive for businesses to invest, and we need to kickstart. Our economy right now, it has been teetering for a long time. Our GDP growth is too low. We've got tailwinds because of these precious metal prices and commodity prices, but we need the broader economy to start kicking. most importantly, we want to create jobs.
Let's change gears for a moment and focus on Bitcoin. Should we be panicking about how dramatically the price has been falling? I mean, what's happening with Bitcoin?
So I do have a smirk on my face, because should we be implies potentially that I own Bitcoin, which I don't, but and nor do our clients. So as at Corian, we're a multi-strategy investment house, and we look for different sources of investments, but we're very highly regulated from both the FSCA perspective, but also we manage predominantly retirement fund money. And when you're governed by Reg 28, which is the regulation that makes sure that we invest very safely, there's restrictions. So this is a non-participant's view of Bitcoin and
What's
cryptos.
happening in that space? Yeah.
So, one of the things that's also been created by what's happened recently is liquidity moves. And a lot of times when there's speculative money around, it can drive assets higher. So, I mean, just silver, for instance, suddenly silver was ratcheting up through the roof. There was lots of speculation, people chasing a finite amount of assets, which caused dramatic price increases. But when that liquidity dries up, the price fell 30% in a day. So with Bitcoin, as much as the Bitcoin market has grown significantly, I still think you're going to have periods where if you have some form of hiccup in markets, and specifically around the real value, is there value? Does it make sense as a reserve currency of the world? And liquidity dries up, you're going to get massive moves. So, one of the reasons that developed markets run well is because of liquidity. Bitcoin has certainly got more and more liquid. But if you look at it relative to the transaction size of many banks in the world, the amount of dollars and hard currencies that move across the globe all the time, it's still relatively small. So a lot of speculation and speculative money flows into these types of investments. There's also been a lot of rhetoric recently out of some of the great investment minds, whether it be a Warren Buffett or heads of banks, a Jamie Dimon, questioning, does Bitcoin have any value and what is it actually there for? So you start having those voices in times like this, and suddenly you get a dearth of liquidity. Prices are going to move.
So what would you say the outlook for cryptos is then, given that we're going to continue to see all of these global uncertainties remain in the picture?
So I think there is still the whether it be legitimate in terms of the long-term outlook as Bitcoin as a reserve currency. In the short term, it's perception. So once again, is when you had this sudden move where the US dollar started strengthening again, whether it was brief or not, because we've had quite a big move of US dollar depreciation, which has really driven a lot of the gold price move, a lot of the Bitcoin move. Once you started having the US dollar finding traction, suddenly is the US dollar, is it on the way back?
Yeah.
Is the US dollar going to stay and keep its position as the reserve currency of the world? So where does it sit? I think perception and trends are critical. As long as the perception lives that this is the alternative, it is got, blockchain behind it. We can't just print cash the way the US fiscus has done. As long as people perceive it that way, it's going to continue to have a place in portfolios. But again, a lot of these calls right now actually just centered around your view of the US dollar.
Very, very interesting. So from crypto to the local currency, the rand, hard cash.
Yes.
That's done extremely well. And is it purely a dollar weakness story, or are there some other components that have contributed to the rand doing so well? I mean, it has lost a little bit of its shine over the last couple of days, but generally it's had a good run.
An unbelievable run. And there's, yes, 100% dollar weakness, but make no mistake that when you're sitting with the real yields that we've got, you're sitting with a potentially low base out of COVID with where the rand got to. You're taking it back to where we were prior to GNU, where there was massive concerns about South Africa's political, environment going forward. So yes, definitely dollar weakness, but a more stable GNU, as in inverted commas, stable GNU, but it's functioning at the moment. Real yields, strong bond market returns, low valuation in the equity markets. Transnet starting to turn around, Eskom's kept the lights on. There's good news. So it's a combination of our improving fiscal environment with dollar weakness.
And I suppose one then wants to understand, what does this mean for the economy when you've got a stronger rand?
Well, a very, very difficult question to answer in us just one single answer. So it's going to be great if we're for any foreign goods that are getting bought, because they're getting cheaper. The oil price in rand terms gets cheaper, although we've had a spike recently in the oil price due to the Iran geopolitical concerns. It's good for oil. It's good for any imported good. The negative is exporters are obviously going to have a reduced revenue line. And where the gold miners and the platinum miners have had this massive kick in commodity prices, even though the rand strengthened, the rand price of gold is still significantly higher than it was. So for them, the stronger rand is impactful, but the commodity prices is far more offset. Where it's not great for is the other exporters in the country, whether it be our farmers, whether it be the citrus farmers, whether it be our nuts, whether it be the blueberries, whether it be vineyards and wine, or any other, whether it be commodity or anything else that we're producing. Suddenly now your goods become more expensive on the world stage. And going back to our question as to why rates weren't cut, potentially there is some sanity in that, maybe they're starting to look at the rand. I don't know, speculation, but is there a way that we need to actually start just looking at, yes, we've got to look at inflation, we've got to look at growth, but we also, if the rand suddenly becomes rampant, because currencies and assets generally overshoot, so the rand was probably too weak. We're probably heading more towards fair value, but that doesn't mean it can't go even stronger and stronger in the other way, which would be eventually negative for our exporters.
Yeah, I mean, that's very, very interesting. And I suppose you want to understand what it also means for the local equity markets as well, when you see the rand performing the way it's been.
So again, a big part of our equity market returns over the last year has been from the gold and platinum counters, the precious metals and minerals. But generally, the markets performed well too. I mean, that was 130% returns over a year. I mean, it's astounding returns. But your banks have performed well. The lag has really been our industrials, but we've had good properties performed well. Banks have performed well. But in the South African context, we've got to look back at almost the 5 years pre-COVID and then the market subsequent. And we've obviously had this incredible run. But the 5 years pre-COVID, markets weren't great. We weren't being rewarded as investors. Out of COVID, markets have obviously rebounded, and this last year has been magnificent. But if you equalize through a period of time, a lot of this needed to be some revaluation because South African assets were very underpriced. So as much as we've had a strong move from our resource counters, we still think that the broader South African economy and asset classes are still showing value, especially relative to some of the expensive peers.
Okay, so then should we or should we not be increasing offshore exposure at the current levels in the rand?
Again, you're not asking the easy question. So what we've had a massive move. So from our perspective, we invest in different geographies, different markets, different asset classes, different managers. But essentially, we were overweight the rand and have been overweight the rand for a while. It would be insane not to be trimming some of our position right now because we've had this overweight rand position and you've seen such a big move. But having said that, our starting point was overweight, we trimming. If I came in as a neutral now, it would be more of an interesting discussion is where would I put my money right now this second? We still constructively bullish on the rand. And again, I think the big driver is that our real yields are still very, very attractive. So it pays you to be invested here. You can just go buy the 10-year bond and get inflation plus 4.5%. That's normally what you'd get out of equity markets. So you're incentivized and rewarded right now to be in SA. And the broader SA assets, as I said earlier, are still relatively well priced. Resources aside, where commodity prices are very volatile. So we as a house are trimming from an overweight position to still a very to still an overweight SA position. But generally speaking, we're still bullish SA.
Okay, so where do the opportunities lie for SA investors, given all that we've spoken about?
So I think we're sitting in a good position, and I think the optimistic view of SA right now is that we've got up. Eskom has stabilized. We're starting to see Transnet and ports looking a little better, getting goods out of our country. If we continue in this trajectory and start getting our GDP higher, we're going to be really attractive. Things are going to be really exciting. So the optimistic part of South Africa right now is let's just keep on trend, but even more so, let's get Johannesburg right. Let's start getting a few wins domestically, which starts creating confidence from corporates to invest, which starts creating foreign investment opportunities, which again becomes self-perpetuating, drives the economy, drives growth, but most importantly creates jobs.
Yeah.
So I think we're in a good relative position to the rest of the world, because the rest of the world does have many of the concerns we've spoken about.
Yeah. So are there any risks that we should be concerned about, or no?
Well, unfortunately, as an emerging market, you are always ultimately slave to the developed market. So should America have some form of massive market implosion, whether it be, Donald Trump related or just general concern about the size of that balance sheet that we've spoken about, the ability to service interest going forward, trade tariffs everywhere. If developed markets come under pressure, unfortunately, emerging markets often feel the brunt, and if not worse. So we can't just sit here in isolation thinking valuations are great, hunky-dory, we're off to the race. This is the best thing on earth. No, it's not. We're still always dependent. We are entirely dependent on whether it be China, US as trading partners. So we have to be, you can be optimistic, but the risks are geopolitically, definitely wars would never be good for markets. And we're not exactly in a stable environment. The Eurozone is not looking great. There are some outliers, but generally speaking, the UK economy is teetering. There's a lot of political ructions in the UK. So those are the types of things that actually keep us awake right now, I would say, is where to for our global money. As an SA investor, we do have our South African assets, but we've also diversified across the world. And again, the big extreme to that is what happens if global markets come under pressure. Unfortunately, there's that old adage, when the US sneezes,
we all catch a cold.
We all catch a cold.
Yeah.
And those things haven't changed.
Yeah. No, thank you so much for your time. Very interesting conversation about our markets, both locally and globally. Gareth Montano from Coring Capital. Thank you so much for your time.